In continuing our series on investor education, today we'll talk a little more on the difference between a cumulative and a non-cumulative fixed deposit. We all know what fixed deposits are, and there are two types of fixed deposits that you can opt for when you apply at a bank or a company fixed deposit. You'll get a cumulative or a non-cumulative fixed deposit. Now, let's begin and understand what a cumulative fixed deposit is. In cumulative fixed deposit, you put a lump sum amount. Say, for example, 1 lakh rupees. In this 1 lakh rupees, you will be paid an interest of 10%, for example. On this, in the entire year, you get 10,000 rupees. What the bank will do in a cumulative deposit is, if you have opted for a cumulative deposit for a period of 2 years, you get an interest of 10,000 on 1 lakh per year. So which means after the end of 2 years, you get 1 lakh 20,000. This is how cumulative deposits work. So the entire money, the entire interest is added to the principal and paid at the time of maturity. Now, here again, if the interest is 10%, it depends on where you are putting a fixed deposit. If you're putting in a company fixed deposit, they will not compound the interest rate every quarter. Banks will compound interest rates every quarter. So you may end up, instead of 10%, your yield might be higher over 2-year tenure, and you might end up getting 10, 10.1, 10.2% as yield. That's how a cumulative fixed deposit works. Now, let's say you are a retired individual who is looking at regular monthly income. In this case, if you put 1 lakh rupees and you will get interest at periodic intervals. For example, if you opt for a quarterly interest, then the bank might give you interest of 2,500 or 3,000 or 3,500 every quarter. So you have interest at regular intervals. So this is what a non-cumulative deposit is. When at the time of renewal, you will get only your principal amount back. You will not get the interest back. That's because the interest has been paid to you at regular intervals in the case of non-cumulative fixed deposits. Generally, you have companies that come out with non-cumulative fixed deposits. So you can look at companies or the post office monthly income schemes. Remember that the interest on cumulative as well as non-cumulative fixed deposit is taxed in the same way according to your tax bracket. You will have to add the interest income to your total income, and you will be taxed according to your tax bracket. So this is basically the difference between a cumulative and a non-cumulative fixed deposit. What we would urge our investors and readers to do is to look at the GoodReturns.in portal for more such classroom related articles, and we have a lot of basic articles which you could quickly skim through and read and understand the finer nuances of the personal finance world. So please log on to GoodReturns, GoodReturns.in for more information.